Michael, let's talk a little bit about the alternative minimum tax. Tell me a little bit about what the AMT is and when people might have to worry about it.
Yes, the dreaded alternative minimum tax. So the origin of the AMT actually comes out of the 1960s. It was a time when we had much higher marginal tax rates, varying 70 to 90% that decade, but way more in available deductions. And so we had a world where people had very high tax brackets, but almost no one actually paid it. And it culminated in a study that came out in 1966 that found a series of taxpayers that had over $200,000 of income in 1966 dollars, but paid nothing in taxes. And so the view from Congress was that we need to shut this sort of high income, high deduction loophole. So we're gonna assign everyone an alternative minimum amount of tax that they have to pay. And the way that the Congress did it was they literally made a second parallel tax system called the AMT system, or alternative minimum tax system, that says you already calculate your tax bill once under the regular system, but we're gonna calculate your tax bill a second time under a second system with different rules, generally less forgiving around all those old loopholes, and you have to pay whichever one is higher of the two. So if your regular tax bill is your bigger bill, you simply pay that. If your regular tax bill is low, but the alternative system finds a bigger tax bill, that's the new minimum amount of tax that you owe anyways. And the system is basically run in that way for the past 40 years. We calculate our tax bill twice, once on the regular system, once under the AMT system, and we have to pay whichever is the higher of the two.